Good evening, and thank you very much for joining us this evening. My name is Grace Ndunge, and this is WEZESHA BIASHARA show, the show where we talk about your business, providing you tips with how to grow it, how to make it better, how to find new markets, and generally how to excel in business. This evening, we are going to be talking about a fundamental part of your business, and that is accounting. Specifically, we are going to be talking about bookkeeping. In studio, I'm joined virtually by a very budding and young accountant who is very knowledgeable and experienced in accounting and bookkeeping for small businesses, Mr. Maxwell Kioko. Maxwell, kindly introduce yourself to our audiences this evening. Any business person, regardless of the size of their business, they're able to start implementing some of the tips that you are going to be giving us this evening. So maybe we just begin by talking about bookkeeping. What is bookkeeping?
Generally, bookkeeping is a record of day-to-day transactions. That is the daily expenses that normally incurred in the business. Also, the income flow through invoicing. Basically, that is the simplest definition of the term bookkeeping. Yeah, and normally bookkeeping, it can occur real-time basis, or sometimes depending on the organization structure, there's a delay. And what really affects or what really determines that is if an organization has an accountant or an accounts clerk, or if the organization is using an external firm as a consultant who are doing their bookkeeping. So that will actually determine whether the accounting is real time or not real time.
All right. Some people say that bookkeeping is really for very big organizations. Like, for example, the way you said, you must have an accountant and stuff like that. What do I do if I'm just a small business? I have just started. Where should I start with my bookkeeping?
That notion of bookkeeping is just for big organization. I totally disagree with it, because basically bookkeeping applies to everyone. Might be personal finances, might be a sole proprietor. As long as you want to know how much money you're making, you might also be employed. You can do your bookkeeping, because your form of income is the payslip. And your bookkeeping, your expenses are things like probably rent, personal entertainment. This is for an individual who is employed. So bookkeeping basically covers from an individual to the largest organizations. Bookkeeping is wide. So the first thing that probably I'll look at, for now we are focusing on the business side. It will depend on the legality of the organization. How is the organization registered? Is it a sole proprietorship? Is it a partnership? Is it a limited company? Because basically, in terms of bookkeeping, generally is just the same, but there are bits different depending on the legality of the organization. Because if it's an NGO is not taxable. And if it's a limited company, the company is taxed on its profit. If it's a partnership is income is taxed on the partners. If it's a sole proprietorship, the income is taxed on the owner. So the tax side applies depending on how the business is registered.
Okay, Max, sometimes, and you said this very well, that bookkeeping applies to everybody. And I'd like you to just take this again. about the taxation, because we'll get back to that later. But just if you can just recap what you just said about, you know, income and taxation, depending on the kind of the legal status. You could just recap that again kindly for our viewers so that they're very clear about this, because this is very important for them to note.
Yeah, basically in bookkeeping, bookkeeping is standard. It doesn't matter really how the organization is registered. Bookkeeping is standard because you have to know how your company or how your entity is performing. But based on the taxation, at the end of now bookkeeping, there is tax. You have to pay your tax. It will now matter because a limited company is taxed on its profit at the end of its financial year. That's 12 months. Depending on the months can be from January to December or depending on the financial calendar. On sole proprietorship, the income of the business is taxed on the owner of the business. Now, here it's not a flat rate. There's something that we call graduated scale rates. Depending, this is applied, for example, if somebody is employed, the form of tax that they incur is payee. How payee is determined is through the graduated scale rates. So for a sole proprietorship, the profit of the business will be taxed based on these graduated scale rates. For partnership, also it will apply the same as a sole proprietorship. A partnership cannot be taxed because legally a partnership does not exist in the eyes of the law. What exists is the individual owners of the business. So the profit of the partnership will be divided according to how the partnership, the partners have decided on the profitability ratio. And that income will be taxed on the sole partners using the same graduated scale rates that were used in the sole proprietorship. So in the eyes of the law, a limited company is a different person from the owners. That's why a limited company is taxed differently from the partnership and from the sole proprietorship. And according to the finance structure, the corporate tax has reduced from 30% to 20%, effective 1st January 2020. But as for last year books, they are still taxed at 30%.
Okay, thank you very much, Max, for that insight. Now, as a business person, an entrepreneur, a small business, I have started my bookkeeping. You say the first thing I need to be looking at is what's my legal status in terms of registration. What's the other thing that I need now? You're taking me through the bookkeeping process. What's the other thing that I need to do as a small business so that I am able to keep my books properly?
As a small business, first of all, you have to note it's very important for you to do bookkeeping in the eyes of the law and also in the eyes of you as a small business person, because you want to know, is your business making sense for you? Is it profitable? When will you break even? So apart from your business plan, you should also have a plan on how to record your accounting, how to do your bookkeeping. You should first of all think, at this stage, I believe that this business is too small for you to probably get an accounts clerk or to probably look for an accounting firm to do bookkeeping for you. So at this stage, things are very, can say, the transactions are not huge. So you as the sole proprietor, you can do this for yourself. First of all, you will first need to look for an appropriate software which will help you record your expenses. There's some software out there. If you're not able to pay for the licenses, you can also use Excel. Excel is also very good, but it's prone to errors since it's not as reliable as accounting softwares. But there are other accounting softwares out there which are very simple to use, like Sage. There's Sage 1, very simple to use. There's QuickBooks, and also there's QuickBooks Online and there's QuickBooks Offline. So you need, first of all, to establish the accounting software that you'll use. Secondly, you'll also need a proper filing system, because in the eyes of the law, you need to keep your files for 7 good years. a proper filing system, the accounting softwares. So those are the most basic things that you need. And at this point, you need also to engage an accounting professional, i.e. an accountant or an accounting firm, so that they'll help you, first of all, help you set up, because at this point you might find yourself in deep trouble because the tax obligations. For example, you might register your PIN and unknowingly or knowingly add an obligation of VAT. When you add these VAT obligations and you don't know the consequences, when you fail to file for the VAT return, which is done monthly on the 20th of the following month, the penalty is 20,000 shillings. So you'll start in a very wrong foot. So when you're starting, it's very advisable, first of all, to get somebody, a CPA, probably, or an accounting firm if you can afford at this level, so that they'll help you set up, especially the tax part, and also the accounting, the setting up of the software, accounting software, and the filing, which is very important.
Thank you, Max. And you're bringing out some very important conversations here, because many small businesses or many business people, when they begin or they start their business, once the business is legally registered, I mean, the next thing they move is to creating marketing brochures. And lo and behold, KRA comes for you and they're asking for money, and you're wondering, where are we starting from? And Max is giving us the process of how to set up your bookkeeping as a business. Step number one, you've already registered as a business with Sharia. So you have your certificate. You're either a limited company, a sole proprietorship, you're a partnership, whatever legal status you choose. And then the next important thing you need to do is to get an accountant. Please do not go ahead and start setting up those systems for yourself. You might mess up. Like Max is saying, you might just say you know, tick on the box for VAT obligation and you don't even understand what that is, and realize later that you made a huge mistake that costs your business money. Secondly, he's saying the next thing you need to do is identify a software that works. Of course, if you have a good accountant, they will advise you and tell you the right software that works. And thirdly, you need to have a proper filing system. And I'm sure in our next conversation, we're going to be digging deep into these stages and seeing what is a filing system and how does it work. Remember that this conversation is going on Twitter, on Newsline TV. That's the handle. The hashtag is financial reporting. Please join us there and give us your thoughts on this conversation about bookkeeping. How should you bookkeep or how should you keep your books as a small business? And Max, you just talked about filing, a filing system. Kindly elaborate on that. What is the filing system and what do you mean by that?
Basically, in the filing system, first of all, you need to have company documents. This is a copy of the certificate of incorporation, a copy of the PIN certificate. And at this point, since you're starting, I believe your tax status is very clean. So you should be able to apply for a tax compliance, which nowadays, when you don't have any obligations or any debts with KRA, when you apply for tax compliance, immediately within seconds, you get a link, you download it. So it's very important to have these documents in your file, because sometimes maybe you're applying for a job, you need these documents quickly. You can, I normally advise that for the incorporation, for the company documents, it's also good to have them in soft. And also you need also to have them in hard copies in the office, but in soft for ease of retrieval when you want to send them somewhere. So file number one should have company documents. File number two, you should have the invoices that you're sending out, the invoicing. File number three should have expenses. Now in your expenses file, you can actually have two expenses files. First, administration expenses. These are things like office expense, rent, anything that you need to run your office. Secondly, you can have another file now, depending on your business. If your business, you incur cost of production, you can now have a file with cost of goods sold. So basically, those are the most important 4 files that you might have or you should have in the beginning. And filing is so, it's a continuous process. So as your business grows, you might have to increase your number of files for proper filing, because you'll also have, as now the business grows, you'll have a petty cash file. Now this petty cash file will contain in accounting, there's something we call materiality concept. And initially, remember I said, before you start, it's good to engage a professional, i.e. a CPA, who will guide you through this. So in this petty cash file, there's the materiality concept, depending on the professional who you engaged at first, might say maybe anything above 5,000 is not petty cash. Anything below 5,000 is petty cash. So the petty cash, normally how the petty cash works, there's a float of money, which is normally given depending on the organization structure. You might say in a week, I use probably 10,000. So this 10,000 is the petty cash float. The way it's being used, all the expenses, they have to be receipted. If there's something which doesn't have a receipt, that it should be backed up with a petty cash voucher. Now this petty cash voucher and all the receipts will be filed in these petty cash files. So the filing system is not constant. It grows as the organization grows.
Okay, yeah. You are taking us, I like this process. So let's see, we said step number 1, you've started a business for bookkeeping. Step number 1, get yourself an accountant. Don't go and do these things by yourself unless you really understand what you're doing. Most business people do not. So it's just safe. Get yourself an accountant. Step number 2, identify a good system, software to help you with the accounting. Step number 3, identify a good filing system. And Max has just gone through some of the files that you will need as a company. You need files to show, to keep your company documents, files to keep your expenses, files to keep your petty cash. And this filing expands as your business grows. Max, please take us to the next step of bookkeeping. What's the next thing that I need to do as a business?
So basically, at this point, since you've started, there's something I had not mentioned earlier. You should now, with the help of the professional that you engaged earlier, at this point, if it's a limited company, I presume you don't have a tax compliance. So you should go ahead and apply for the tax compliance. After applying for the tax compliance, so that you file it in the company documents. So that's very important. So after you get your filing system right, secondly, there's something now which is called, now this is depending on the size of the organization. Also, with the help of the professional that you engaged earlier, you should come up with something which is called an accounting manual. An accounting manual basically is the constitution of the finance department, just like the way a country normally has the constitution. Now, in this accounting manual, it will basically state everything that is supposed to be done in the accounting department. Like, for example, how long do you invoice after a job? Is it immediately? Is it after 1 week? How long, is there any credit period that you've given your creditors? Are your invoice due on receipt, or you have a debtors period, maybe 30 days or 40 days? But normally this is controlled by the customers. Also, how much is your petty cash, weekly petty cash, how much? And on the petty cash part is not cast on stone. The petty cash might expand depending on the organization as it grows. So how much is your weekly petty cash? And also now the rules and the regulations of the finance department. Do you pay, are you registered for payee? If you are registered for payee, does the owner earn any income? So everything should be there in the accounting manual. And also it should state, like in the accounting manual, you should have a list of your assets, an asset list. Basically, an accounting manual is a whole book, and it's really hard to touch on the whole of it, because it entails, it's accounting finance from A to Z. But it's a very important document to have when you're starting up. Most businesses, this is where they go wrong. They don't have an accounting manual. Now, when you grow like 10 years down the line, or maybe 5 years down the line, it's when probably an auditor comes and then asks you, do you have an accounting manual? You say you don't have. And then you start a process of now creating the accounting manual. But I normally advise clients, it's very important to have it at the time of starting up. Of course, the accounting manual will grow, and you'll add things on the manual as the business grows. So it's just a good business practice to have it on the day one.
Thank you, Max. It's definitely a good business practice that many entrepreneurs do not even think about. I know I am one of them. And I had not started thinking about an accounting manual until recently. But I mean, what will hurt you? Why should I make sure that I keep my books properly as a business, Max?
The advantages of having your books properly, first of all, I can start from the owners of the business. First of all, they're able to see their growth from day one. Let's say 5 years down the line, they'll see their growth from year number one, and they'll know, they can be able to project when they will break even. Because being in business without knowing your numbers, it's like doing nothing, because you're just there. It's like a cycle with no purpose. So you should be able to know your numbers. The only way you can know your numbers is by doing proper bookkeeping, and also a consistent bookkeeping. Because you see, there's some people who will start doing bookkeeping, then down the line they get lost or they get too busy. That's when you know your business is growing. So at this point, when you get too busy, you realize that you, as the owner of the business, you are not able to keep up with the transaction, looking for customers, and also recording the transaction. At this point is when you know your hands are full, and you need to seek services from professionals. The advantage to this is that it's not a must you hire an accounts clerk at that point. Because truth be told, there is no work for this accounts clerk to be doing from the first week of the month to the last week of the month. So there are organizations, small organizations like my company, MK Consultancy, whereby we do this for you. You look for those small organizations, they'll charge you probably a small fee. I can say, depending on the workload. It's really hard to say, but depending on the workload and depending on the measures that they use to charge over that workload. So basically, probably it might be as low as even Kenya shillings 5,000, and it might be high from 5,000 to even 50,000. Now, depending on the size of the organization, and also depending on the business owner negotiating skills. So at this point, you engage such firms. They'll do your books, monthly books or weekly, depending on the needs of the owner. So if it's monthly, they'll do something which is called a management accounts. Basically, it will be just a profit and loss account, a balance sheet, to be able to know your worth of the business, and also if the business has any loans. So a balance sheet is very important. Secondly, a cash flow. Cash flow is also very important, because from the business perspective, you will be able to see how your cash flow is. Because having a good cash flow doesn't mean you are making profits. So cash flow is very important, because the only way you can be able to run your organization effectively is knowing your financial, where you stand financially. And also, the advantage of engaging these firms at this point is that they'll also advise you. Over and above giving you the financial reports, there is something which is called a management report. So they will advise you on the best practices that probably the challenges, they'll advise you on tax, They'll advise you on debt collection. They'll basically give you an overview. So you'll have a form of a guidance. And the challenge is at this point, some of the entrepreneurs, they perceive accounting as a formality. They don't embrace accounting. As an entrepreneur, the most important thing to note is that the way that you have passion to run that business, you should also have passion in the accounting reports, because through those reports, it's the only way you'll know if probably you are heading somewhere, or you are incurring losses, or probably your business, you need to readjust something. Yes.
Thank you, Max. Those are very elaborate advantages. It's the only way you will know whether you're making money or you're just sustaining yourself. It's the only way you will be able to make decisions ever for your business. And it's very good to have the same passion as you have for your business to run it. You should and put that same passion in bookkeeping, so that you make sure that you succeed as a business person. Nobody starts a business for them to fail, of course. And a lot of people don't start businesses to just sustain themselves. Everybody is looking at a business that can outlive them. But for your business to outlive you, then you have to put in the best practices in account. And we are saying one of these practices is bookkeeping. This evening, we are live on Twitter. The conversation is going on. The hashtag is financial reporting. The Twitter handle is Newsline TV. And Max has just taken us through, the process of bookkeeping, where you start. You must have an accountant. You must have a good software. You must be able to have a proper filing system, because it is through the filing system that you're able to track your expenses, track your income, track your invoices, track your, the debtors and such kinds of things. If it's not properly filed and it's not properly documented, you will never be able to find out when things are about to go wrong. And Max, one of the things that businesses find themselves and entrepreneurs find very difficult in their lives is to bookkeep for themselves as individuals and bookkeep for the business. It's at some point it seems like it's either a very thin line or the line does not exist at all. So the business is equal to the owner. How do we separate that so that we are able to track the real expenses for a business?
Now, the most important, that's a very good question, separating personal and business finances. And most entrepreneurs, they find themselves deep into using companies or using the business resources to finance their own personal risk, probably personal expenses. For me, what I can say is I can give tips for keeping that will enable one to keep personal and business finance apart. The tip number one that I normally give is maintain separate accounts. As a business owner, your business should have a bank account on its own, with its own probably credit card, debit cards, and everything. And also you as a business owner, you should have your own personal account. I greatly discourage having credit cards and debit cards for small businesses, because at some point, business owners are tempted. We are humans. You're tempted to use that card to swipe for probably your own personal expenses. So until when your business has grown and you've matured to that level, it's only when I can advise to have those cards, because some businesses are unique and you need those cards. And if your business is not unique, don't lie to yourself that is unique so that you get those cards, because you'll mess up your finances. Secondly, you should pay yourself a salary. The most, I can call it an excuse, or maybe for lack of better terms, most of the entrepreneurs normally say that my business can't pay me, so that you can't have a salary. But how are you surviving? At the end of the day, you're surviving. You're using the business money to pay for your personal expenses. So have that small salary. monthly salary. Because don't lie yourself that with that phrase that my business is not paying me. In one way or another, it's paying you directly. So have that structured salary, no matter the amount, or depending on the capability of the business, have that small salary. Secondly, thirdly, track shared expenses. Because there's sometimes whereby for small business owners, you find that you have money, you have your own personal money and the business doesn't have money. Probably maybe you haven't been paid, or the money that you have in the business account is little. So track the expense. So use your own money, but through the bookkeeping also, because you see, now this is a loan. When you use your own personal expense, personal money to facilitate a business expense, this is form of a loan. So your accountant will help you know how to record this, because it's very clear to track those expenses so that you know where you are, and also you know how much your business owes you as the owner, because there's that relationship between you and the owner. At some point you borrow, the business borrows money from you, and it's very important for the, so that you track your growth from day one. And borrowing, this is a balance sheet item, one of the reports that if you decide to engage a professional, those are the one of the reports that that professional will be giving you every month. So you'll be knowing your liability status, how many people you owe and how much you are owed as a business. So I've said maintain separate accounts, pay yourself a salary, track expenses. So for me, those are the most important tips that will help. And another one that I can say is just self-discipline. As a business person, I believe that without self-discipline, you're going nowhere. So with these things, you need to have a very high level of self-discipline, because sometimes you are human and we tend to ignore the set rules. Yeah, that's what I can say. The tips of keeping your personal and business finances apart.
Right, Mark. Yes.
Another thing that I can also say, a reason. Now, these are reasons. Some of the just the reasons of why you should do this. First of all, I can say tax reasons, because you know, when you separate your expenses, at the end of the year, the income of the business will be taxed. And in tax, there's some things that we call allowable expenses and non-allowable expenses. For example, allowable expenses are any expenses that are directly related to the business. And non-allowable expenses are expenses which are not directly related to the business. We can say probably your house rent. Your house rent is not directly related to your business. Not unless you argue, in this case, you say that you have a home office, which is a very thin line. So there's some things, or for example, you went to Mombasa for a holiday. That's not an allowable expense in the business. So the reason number one is tax reasons. Reason number two is your books of accounts will make sense to you, because they'll reflect a true and a fair view of the position of the business. My last reason is your professional image. Because when you have separate accounts, and let's say you're invoicing a client, which bank account will you give that client? If you give that client your personal account, that client might look at you in a different perspective, like you're not serious. But it's more professional if you have a business account for your business. So those are my, among other reasons, those are the reasons that I can say right now.
Max, you talk about an interesting concept, self-discipline. That's something that we don't hear a lot when we are talking about, accounts and accounting and bookkeeping. But it's one of the most essential, I'd say, traits that a business owner needs to have so that they are able to succeed in business. And we are talking about bookkeeping, and we are asking, how is bookkeeping related to your accounting? Where do they meet? Is it even necessary? The answer is yes. Bookkeeping is very necessary. It's important that you do it as a business. If you have not started, there is no better time to start than now. So you need to get yourself an accountant. And today in WEZESHA BIASHARA show, we are joined by an accountant, Maxwell Kioko, whose number is displayed on your screen right now. Should you be in touch or in need of accounting services, bookkeeping, auditing, anything that deals with accounting, he's available to help you manage your business and give you ideas on how you can run your business successfully and profitably. Very, very important. And Max, there are questions that are coming through from our audience online and also virtually. We'll be opening the session for our virtual audiences to ask questions. But let me take the questions from our online audience on Facebook first. We have a question about bookkeeping, and Phoebe is asking, can bookkeeping provide a company with customized reports as per its needs? Max?
I think I've lost you there. I haven't heard you very well.
So there are questions. There's a question that's coming from Facebook. The question is, can bookkeeping provide a company with customized reports as per its needs?
Yes, yes, and yes. What I can say is that every company is unique. Basically, the principles of bookkeeping cut across board. They're still the same principles, but depending on the reports, every company is unique. So during this bookkeeping, and depending on how you are, whatever your organization is involved in, it might be manufacturing, it might be a consultancy services. Because you see, for example, manufacturing has cost of goods. A consultancy services doesn't have cost of goods. So reports are unique, but basically it will just be the P&L. Because in the P&L, if it's manufacturing, it will be, or let's say your business has projects. You can have a P&L by projects. So P&L is customizable depending on the organization needs. So yes.
All right, thank you. Another question that is related to something that you talked about from Francis Mbai. He's asking, what are some of the, he's actually asking, sorry, I need to take this. There are several questions. There was one that was related to the legal implications, because you had talked about this. Yes, he's asking, are there any legal implications if the business does not have proper bookkeeping?
Sorry, come again.
Max, the question is, are there any legal implications if the business does not have proper books? The business does not do proper bookkeeping?
Yes, the implications which are there is, first of all, what are the tax obligations of this business? So if they don't have proper bookkeeping, it means they even don't know their tax obligations. So a business, the most basic tax obligations which are normally experienced, there's the VAT and there's the payee. So without a proper bookkeeping, for example, you might not know how much you're paying for payee. Okay, some of the business owners might argue that probably I have a payroll software. Okay, that's correct. You might be having a payroll software and doing your payee returns every month and paying them on time. But at the end of the year, you don't know how much income you've received as a business, and you don't know how much expenses you've incurred as a business. So what will you use, or what management accounts will you provide to the auditors for them to audit you? This means at the end of the year, you'll end up cooking books. So you might say, yes, you'll survive, but look at it this way, from the owner's perspective of the business. Down the line, this is 5 years down the line, you want to know how you grew from year number 1, year number 2, year number 3. And at this point now, your year number 5, you need investors to come in. A proper investor and a knowledgeable investor will ask for your books of account. And trust you me, that knowledgeable investor probably will have, he or she will have a professional who will look into your books. And if you've cooked your books, trust you me, there are always loopholes. So this investor will be told by the professional who he has hired, and then he'll come in with that knowledge because he knows probably your business has money. So he'll undercut you. But if you had your books from day one, saying the truth, at this point now you'll be able to argue better. So it's very important to have your books of account, one for tax purposes, secondly for you as a business owner to know how you grew. And also you can use your books to benchmark. You can benchmark, you can compare your performance for last year to this year and know, be able to tell what were the challenges and how you can overcome those challenges. For me, there is no greater good than that. So, because you're in business to make money, these books, with proper bookkeeping, you should be able to know the growth. Are you growing as a business? If you're not growing, why are you not growing? What are the challenges? And how are you planning to overcome the challenges? Are the challenges within your limits or they're beyond your limits?
All right, Max, you have put it very well. There is no greater joy than being able, to see how you have grown, to watch your journey on paper. It's very exciting. At this stage, I would like to request that if any of our studio audience has a question, kindly unmute yourself and ask your question to Max. Meanwhile, I just want to remind our viewers that the conversation is going on Twitter. The hashtag is financial reporting, and the Twitter handle is Newsline TV. Max, we've had a very interesting conversation going on today, and it seems like none of our studio audience wants to ask a question because I've seen so many other questions on Facebook, and I will not go into responding to all of these questions, but kindly feel free to get in touch with Maxwell Kioko. His phone number is provided right on your is provided on your on screen right now. Had a very interesting conversation going on today. And all right, so Max, I want to bring this conversation to a close, but before I do that, I'd like to request that you recap everything we've talked about today, especially the process of setting up bookkeeping, and tell us briefly why it's important. Just remind our viewers and the entrepreneurs that have joined us this evening to discuss or to learn from us.
Basically, okay, thank you. Basically, we started on, let's say you have a business idea. How do you proceed from that business idea? First of all, you have to know the legality of the business. How will you register the business? Is it a limited company? Is it a sole proprietorship? Is it a partnership? Once you've decided on that, let's say you go with a limited company, you have to know the tax liabilities which come with a limited company. Because after registration with the Sharia house, you need to register online KRA for you to get a PIN. And once you get a PIN, this is where now you should engage a professional, let's say maybe a firm like mine or a CPA or just an accountant, so that he or she will be able to guide you through the tax obligations, whether you need to register for VAT, PAYE at that specific point. Once you've done that, now the professional will advise you on the accounting software that you'll use. At this point, you might say accounting softwares are expensive, but this is an initial investment that will go into your business. So you can choose, for example, the Sage One. It's very cheap. It's around, I think, 15,000 or 14,000 a year. It's an online software. You can also go with QuickBooks Online. There's QuickBooks Offline. And if you feel that you can't really afford these accounting softwares at this time, I believe you have a computer, a laptop, which has an Excel. So you can basically use Excel to record your things. But I normally discourage Excel because it's not, it's prone to errors, unlike compared to the accounting softwares. Now, after you've chosen the appropriate accounting software, now you should, this is with the help of the professional, the CPA or the accountant, or probably maybe you've consulted a firm. Now it's the filing structure. You should open up a filing system. Basic files, these are company documents, you should file them. There's the invoicing part, and there's the expenses, and also petty cash. This is very important because the law actually requires you to have files for up to 7 years. So when you're audited, let's say, for example, KRA might audit you due to various reasons. Maybe tax, you haven't been remitting your tax, or they've noticed something funny with you, they might audit you. So you need to provide all these details, all these records. Mind you, you don't have them. You see, now KRA might, they can do a tax assessment on you. And when you are done for a tax assessment and you don't have records to counter argue on the tax assessment, you see, you'll be the one who will be on the losing end, because KRA actually might, when they decide to come on you, they can do that. So the filing is very important. Now, after the filing, with the help of this, the professional that you've actually engaged, there is something which is called an accounting manual. An accounting manual basically is the constitution of a finance department. Now, this accounting manual will entail all the rules of in the finance department. It will entail, there's something that is called, after how long should you write off a debt? It will be in the accounting manual. And also after, it will also show you, it will also state what method are you using to depreciate your assets. So an accounting manual is a very detailed manual that will help your organization. And this accounting manual grows depending with the organization needs. Because when you're a startup or when you're year number one, probably you don't even have enough assets, or maybe your assets will depreciate after 5 years. That's when they will reach the negative point. So some of these things in the accounting manual won't be relevant at that point when you're starting a business. But I normally advise it's important to have it just as a form of good practices. Because once you teach yourself to follow the manual from day number one up to when your business grows, it won't be hard for you to follow the accounting manual. Another thing I normally advise entrepreneurs is entrepreneurs normally take accounts as a routine. So entrepreneurs should be very self-disciplined so that they embrace whatever information is coming out of their records. Because you see, accounts is garbage in, garbage out. It's just like the computer. If you don't feed in the correct information, you won't get the desired information at the end. So the entrepreneurs should embrace the whole process, and they should not embrace the accounting part just to fear KRA. I should file my returns because of KRA and everything. I think that's a wrong perspective. They should embrace this because they know it's only through this they'll be able to understand their business better and their performance, and also to benchmark, like to compare the number of years and to see their growth. So basically, I think And another thing that we've talked about also is the separation of finances between the business and the entrepreneur, him or herself. So this is normally a challenge to entrepreneurs. And I just had few tips for entrepreneurs how to do this. First was maintaining separate bank accounts, personal and business bank account. Secondly, they should pay themselves a salary. They should avoid these excuses that entrepreneurs normally say that uh, I cannot be able to pay myself right now. But deep down, when we look into your books, you are using the you're using the business money to pay for personal expenses. So entrepreneurs, they should just have self-discipline and be real with themselves, earn a small salary if the business allows. And also they should track shared expenses, because at some point you see the business doesn't have money and the entrepreneur, maybe he or she has money in their own personal accounts. So whenever they use their personal money to finance business purpose, they should make sure that they've recorded it. And with the help of the accountant or the help of the consultant, the consultant will guide them on how to record this expense actually. So basically, those are the few tips that I have for separation, how to separate personal and business finance. I also have why reasons why you should do this. Reason number one is just your professional image. As a business owner, you look more professional when you have a business account. Let's say, for example, you've invoiced a client, and then at the bottom of your invoice, it's your personal account that you are paying with. So for me, that will raise some, depending on different perspectives, it's not cast on stone. So have, you look more professional. That was reason number one. Reason number two, your books of account will be able to tell you where you are. If you separate your personal and business expenses. Because you see, when you load your personal expenses into your business, you are reducing your profit. So at the end of it all, your profit, your bottom line, either a profit or loss, won't show the true picture because you've loaded your personal expenses there. Another reason is tax reasons. At the end of the year, when you're taxed, there are some expenses which are allowable and some which are not allowable. Allowable expenses are expenses which directly related to the business. Non-allowable expenses are expenses which are not directly related to the business, i.e. the personal expenses are not directly related to the business. So those are my few reasons why you should try and separate personal and business finances. I believe that was what we've just discussed. Yes, Grace.
Thank you, Max. Thank you very much for finding time to be with us today. Running a business is not easy, it's extremely difficult. But it's even more difficult if you have no books and you have nothing to tell you whether you are going in the right direction or in the wrong direction. You have no benchmarking for yourself, to benchmark against yourself or against another person. And you have no way to truly tell or even estimate how big your business is growing or whether you're making losses or whatever. For you, for you to be able to avoid, such doubts and such inconsistencies in your business, then what you need to do is make sure that you keep your books properly. It's an easy, simple process where you don't have capacity internally or where your business is a bit too small. Max has told us that it's important for you to find a professional, an accountant. Those ladies and gentlemen that have studied CPA, that know what the numbers mean, and they will be able to guide you so that you don't grope in the dark as you're running your business. It's hard enough, to run a business. It's extremely hard to run it when you don't know what is happening. Thank you very much, Max, for finding time to be with us this evening. This has been WEZESHA BIASHARA show. My name is Grace Ndunge, and I am so excited you were able to find time to be with us. We shall be back again next week, same time, same channel, hashtag financial reporting on Twitter, on Newsline TV. Until then, keep talking to us on Twitter, keep the conversation going, ask questions. Max is available for you. His number is displayed on the screen right now. So get in touch with Max that he may be able to assist you keep your books in line and in order. Until next time, thank you very much for being with us, and may God bless you, and stay safe and stay home until they say we can't anymore. Goodbye.
Bye.